We have 5 stocks here that our Everything Money community is researching right now. I really love how the EM community engages and gives me ideas. I've gotten so many great investment ideas from the thousands of people in this community talking every single day. I love how our EM community shares ideas and shares their research. I and many people in this community share ideas and get great investing ideas from the engagement that happens here. Your Uncle Paul and Mo are going to share these 5 ideas right now. Let's get to the first stock. MELI, MercadoLibre. Now, guys, for those of you who know, I have 2 homes. Mo and I own 2 homes in Mexico. I've bought them from MercadoLibre many times, and it's a very common stock. We're going to take a look at this right now. Mo, what are your high-level thoughts of it?
First thought I have here.
Yeah.
Look at the price. It's in the thousands. We don't usually see stocks that are in the
and we
thousands.
don't even, by the way, I didn't even look at the price of the stock because of how little I care about that.
It was funny because I looked and I saw up 1550 today and I go, only 1.2%.
I'll tell you what grabs my attention
What's
first. 82 PE and a 375-year PE. But look at this, Mo. The net income over the last year was 757 million. The last 5 years was 167. Look at the free cash flow.
Wow.
Very, very different. Huge difference in free cash flow. We love it when the free cash flow is greater than net income. The question is, why is that the case here?
Something else that grabs my attention. The gross profit margin is 50% and the 5-year profit margin is 2.7. It's a big discrepancy.
Yeah, because if you look at a company like Amazon, their gross profit margin, even from people who are Amazon bulls who say it's not indicative of the current, is like 25 to 40%.
Yeah.
So this is higher than even Amazon's gross margin from the super Amazon bulls out there.
Love what I'm seeing on ROIC, both 5-year and 1 year.
So guys, this tells me they get a good return on the money invested in the business. It's selling for 15 times price to free cash flow. Guys, here's my take on MercadoLibre. Before I run some analysis, I'd want to go in the community and see what they're saying about why the free cash flow and the net income are so different. Is this a long-term thing? Is this going to be a permanent thing? Why is there such a difference between those two? That's a really big difference. Don't you think?
It is huge, yes.
All right. Company number 2, CF Industries. Let's take a look at that one right now.
They are a leading producer and distributor of nitrogen fertilizers.
What is a nitrogen fertilizer?
Fertilizer that uses nitrogen.
Nothing gets by Mo. Nothing gets by Mo. All-time high, a little under 14 months ago at 120, currently 84. 52-week low back in June of 60. Another example of a free cash flow being greater than net income. Mm-hmm. So like that. Look at this price of free cash flow, Mo. 8.
Yeah.
Look at their PE. 7.
Wow.
That's pretty low. Let's go see what they're doing for share buybacks. Ooh, bought 8-pillar stock, Mo.
Whoa.
Did not expect that.
Did not expect that either.
Let's see if their revenue jumped up. Oh, look at that revenue. Ooh, okay.
Is it huge?
So look at this. We had 3.7, 4.2, 4.7, 4.3, 4.6, 10, 8.7.
So it looks like it's coming back down.
Let's go quarter to quarter.
Looks like it's coming back down quickly too.
This last June quarter, 1.78 billion versus 3.4 billion in the previous June. So big time drops here. Are they still making money every quarter? They really are. One quarter they didn't, September of 21. Okay. That's a little interesting. Let's see what analyst estimates are.
Yeah, that's going to be interesting.
Oh boy, look at those big drops in profit.
Wow. Yeah. So analysts are seeing exactly what we were just talking about.
Yeah. So analysts are looking at this going from $8.47 a share this year to $6.76 in 2025. Revenue dropping 41%. Oh my God, look at that drop in revenue. 41.8% this year. Then starting to climb back up back in 2025.
Doesn't mean there's not a price to pay, but this is tough.
So let's go off of, and by the way, I don't like going off of analyst estimates, but for me, I'm just going to sit there and say, okay, let's discount the 676 to $5.
Okay.
And I'm being very high level. And let's just go, I'm going to sit there and say, I'm going to be interested starting at $60. There's no rhyme or reason for that other than me being conservative and saying, I have really no reason to want this company unless I saw it more stable. Mm-hmm. And right now there's going to be a lot of instability in the profit. Mm-hmm. Unless you understand this industry more and this company and you have some more insight into the business. If so, come into the community and share it with us.
Absolutely. And
all right.
Tag us, please.
Yes. Next stock, TSN, Tyson Foods. Okay, gross profit.
Look at that profit margin. The 1 year.
Oh my gosh.
Oh my gosh, it's right.
Profit margin of 0.6%.
Oh,
Free
no.
cash flow is
Oh,
even
no.
worse, Mo. Their free cash flow is 20% below
And
on the 5-year average.
And look at their dividend that they're paying on that free cash flow.
Yeah. Well, they can afford it on the 5-year. 665 million. And this is probably one of those companies that everybody who's a dividend lover sits there and goes, yeah, 4%. Okay. And this is a business that's probably a pretty stable business.
Yeah, I would say so.
Look at their revenue.
Yeah, they had pretty big COVID spikes.
And they made a lot. So this last year, they had a big drop in profit.
Yes,
Other income and expenses, a drop of $422 million.
Okay.
That was a big write-off.
Big time.
That was a big write-off. Okay, let's see their 8 pillars. ROIC is low. Okay, oh boy, a lot of X's here for the big stuff. A lot of debt. Okay, so I'm looking at this going, okay, an 8 PE, a 10 5-year average free cash flow.
So they do hold 21% of the food processing market and the biggest protein supplier in the States.
I think you got to pay a really cheap price for this company because it's a
too.
low ROIC, not a high margin.
Not going to give you big growth.
So there's the moat stat. It's a commodity business, but they are very reputable. We all know Tyson
Everybody
Foods.
knows Tyson. I mean, when you think of, call it frozen food or chicken, you think of Tyson.
See what analysts are saying. Oh my, what the F?
What?
Very few number of analysts there.
Yeah.
But how is that even possible?
I know. Let's see the revenue side. That's not okay.
Let's see what they were doing pre-COVID. 40 billion in revenue. So 7% bottom line margin. So they've been hit hard recently by temporary gross profit issues. Okay. You know what, guys? We're going to go a little bit further here. I'm going to put this in the stock analyzer tool to determine a price to pay. Because look at this, Mo. Their 5 and 10-year average profit margin, it's been hit hard recently.
Right.
Okay. So I'm going to do a 10-year analysis. Mo, you do yours. I'll do mine. Okay. Revenue growth, now profit margin. And free cash flow. PE. Now, PE is very misleading here. And same with the price of free cash flow because of how bad the last year was. Now, this is probably a company that, I look at this company going, it's not a sexy business. It's not something that's an obvious thing to me. So since it's not obvious, I want to get a higher return. My desired annual return, which is basically my margin of safety, I put my low one at 11.5%, my middle at 13%, and my high at 14.5%. Mo, what'd you do for revenue growth?
I did 1, 3, and 5.
I did 2, 3.5, and 5.
Okay.
I think they're going to go up with inflation. Profit margin.
3, 4, and 5.
4, 4.5, 5. Okay. Free cash flow.
2, 3, 4.
3, 3.5, 4.
I like your numbers better. I just spread them a little bit wider.
Fine. PE.
13, 15, and 17.
I did 12, 14, and 16.
Okay. Relatively close. Same thing. 13, 15, 17.
So look what Mo did there. He beat up these numbers more than I did, but he gave a higher multiple than I did. So that can help even things out. So he sat there and said, listen, I'm being really conservative here. I'll give a higher PE. Yeah. Now, what was your desired return?
I did 12, 14, and 16.
Okay, but then he went with a really high desired return.
I did, and it's just...
Remember, guys, this desired return includes the dividend.
My bias might be in here, too.
Maybe.
Like, I don't want to own it or something.
Yeah, that could be. And by the way, that's okay. Yeah. If you don't want to own a company, but you want to sit there and say, listen, for the right price, a good investor knows that the right price makes everything a good investment.
And that's the other thing. Like if I put in 12, 14, and 16 and it lights up green for me, I'm like, okay, now I need to go and be more serious about this.
Okay, I hit analyze.
Yeah.
Oh my gosh.
Okay, well, there we go.
Low price of 50 to 65, high price of 76 to 95, middle price of 60 to 80.
So
wow.
30 to 45 on the low, 71 to 89 on the high, 46 or 49 to 66 in the middle. See, this is what I'm saying. Now I should go back and be a little more serious about this.
Shoot. All-time high of $96 on February 8th, 2022, and it's currently at $47. I'm going to add it to my watch list for $45. Notify me. So it'll notify me now on my software and on my email. But this is interesting.
It is interesting.
So Guys, join our community, free 7-day trial at everythingmoney.com. If you have something to say about this, let's engage in here because we get everybody in here, including myself, gets a lot of great investment ideas when they share their ideas here. So everythingmoney.com, we're allowing you to try this entire site, the community and the tools for 7 days for free. I don't want you to make a decision right now. I want you to test drive this thing. The only way to make that informed decision is being on the inside. So everythingmoney.com, go check it out. Company number 4, RHI, Robert Half International. They are payroll company. HR company, provides temporary, permanent, and outcome-based staffing for both in-person and remote positions in finance and accounting. So it's a staffing business. Okay, so staffing has gone pretty well lately.
It sure has.
Let's see their income statement. Big jumps, and then we're already starting to see a decline.
Mm-hmm.
So guys, look at this. Pre-COVID, very stable. 4.9, 5.3, 5.2, 5.5, 6, 5.7. It was declining and then boom, skyrocket.
And if you go quarterly, the past 5 quarters have been on decline.
Okay, so factor that into your analysis here. Let's look at their profit.
Okay.
I'm actually surprised by this profit. I thought it would have been higher. So several $100 million a year. It looks like before COVID, their average was 350 to 400. And their current market cap is $8 billion. So it's still a 20 plus PE based on that.
Mm-hmm.
But in the last 5 years, their PE is about 16 and their price to free cash flow is 14. So that's probably garnering a lot of attention, as well as this 2.4% dividend that pays out $200 million of their 5-year free cash flow. Now, the question is this a company you enter when the economy is doing well and booming?
Right.
How did they do in the last recession of the great financial crisis, especially in the finance industry?
That's a great question. They
actually stable.
They took a hit, but they returned very quickly.
And they were profitable the entire time.
Yeah. I'm sorry, they took a revenue hit.
Yeah. High gross margin, 41%. Bottom line margin, very consistent.
Yeah.
Let's see what analyst estimates are saying.
I think you're going to be surprised at the 8 pillars too.
Wow. Big jumps in analysts from 380 a share this year to 750 in 4 years. All right, let's go to the 8 pillars here. Do I want to do it? Oh my gosh.
Mm-hmm.
14 price to free cash flow, 16 PE, very high return on invested capital, higher free cash flow growth than net income, very, very low debt. Wow, look at that debt. It's so low, Mo. Look at this, guys. Their market cap is $8 billion. Their enterprise value is $8.8 billion. Market cap is all the shares outstanding if you bought them on the market. Enterprise value includes all the debt. They have very, very little debt.
Yeah. $700
million in debt. This is incredible. You know, I want to do another stock analyzer on this one.
Okay.
Actually, I've done it before. Let's pull it up.
Let's see what you did.
RHI, Robert Half. I did it May 3rd, 2023. Oh, that's pretty conservative here.
Oh, yeah, I did it too. Let's see. What'd you put in?
0, 3, and 6.
Okay, I did 2, 4, and 6.
And I did 20-year analysis.
Okay, I did 10.
Okay, good. Profit margin, I did 7, 8, 9.
I did 6, 6.5, and 7.
Okay, and even though the free cash flow is higher, I still kept it 7, 8, 9.
I went higher there. I went 6.5, 7, 7.5.
Okay, I'm going to do 8, 9, and 10. I'm going to change that a little bit.
Okay.
Now for PE. Okay, so the reason I went to lower PE, I think, even though the ROIC is high, guys, remember, we start with 15, and as we go higher, you adjust your PE based on our return on invested capital, because that shows a moat. You adjust it for growth potential. But I think went lower because of the fact that we're probably in the better part of an economy than we will be in the future. But I still think this PE might be a little low. I'm actually going to increase it. I'm going to go 14, 16, and 18. What about you, Mo?
I'm going to go 13, 15, and 17. And previously I had 10, 12, and 14, and I'm not sure why.
Okay. Now, what was your desired return, which is essentially your margin of safety?
So I did 12.5, 15, and 17.5.
So I did 12, 13.5, and 15.
Okay.
Analyze button.
Okay.
All right. I'm actually going to, my low price is 40. My high price is 83. But my middle price is 55 to 60. I have my watch list at 50. I'm actually going to change that to 60.
I'm going to throw mine on at 60 as well.
This doesn't mean I'm buying it at 60, guys. What this means is I'm now going to get notified and I'm going to go in the community. I'm going to start doing my own research and engage with people there to see what exactly they're looking at. Okay. Last company, the 5th company. We all know it. We all love it. And guys, I'm not going to lie to you. I think Dominoes Pizza Thin Crust is one of the best thin crusts out there. Don't at me. Don't hate me. I don't want to hear it. I freaking love it. Dominoes Pizza started in Ann Arbor, Ypsilanti, Michigan.
No kidding.
Yeah. From two brothers. Dominic's is the Ann Arbor version with a brother that did not spin off and do Domino's. So he is the poor brother.
Oh.
Yeah,
They
unfortunately.
probably don't help him at all.
What was that?
They probably don't. They just ignore him.
Yeah, I have no idea. So anyhow, Domino's Pizza has been on a tear lately. They've been doing a lot of growing.
I like their automatic card delivery service thing.
Yeah. Net income and free cash flow are very, very consistent. Very similar. 37% gross margin, 11% bottom line margin, probably a lot of franchise fees in there. 20,000 global stores.
What's with the ROIC?
Yeah, the ROC is negative. It's probably some calculation based on
Yeah.
how the thing works. Look at the 8 pillars. Okay.
Buying back a lot of shares.
They are. It seems expensive.
It does.
5-year PE of 20. Does it justify a high PE and a high price of free cash flow, Mo?
I mean, it's a huge brand. Everybody knows it, but it's not like it's a moat in any way.
Yeah, I'm not really interested in this company.
Either.
I look at this saying, so if I'm going to look at this, I'm going to look because pizza places are a dime a dozen. It's not like fast food.
Right.
Like you don't have mom and pop fast food joints in town.
Right.
And I look at this going, there's a lot of competition for it. If this thing got dirt cheap, when I say dirt cheap, I mean literally fell in half. I might start considering it. And I know that's absurd, guys. But that's the great thing about investing. You can sit there and pick the point where you say, this is where I care. Because you have so many options. You have 10,000 options out there. Just like in food. If all of a sudden you want to go out to dinner, but some place says, hey, we're half off today, and it's your favorite restaurant, you're going to go there. Same thing here. And not even your favorite restaurant. Maybe it's a restaurant you're like, okay, I'll try it. Half off. Let's go give it a shot. So guys, these are our 5 companies from our community. We love it. Join everythingmoney.com, 7-day free trial. Sign up now.